So if you clicked on this video, you may be curious about how to sell a company. This video is for any entrepreneur or business owner. Maybe you're bored with your business or burnt out running it. Or maybe you have a burning passion to do something else. Maybe you just want to sell a business because you haven't done it before. Maybe you just want the esteem and validation of selling something you created for an incredible value. You might also be curious if what you built would be of interest to buyers. Maybe you're wondering how much work you have to do to prepare it for sale. If any of those thoughts are in your mind, then you're in the right place. In this video, I'm going to teach you why market timing and company reputation are critical for maximum exit. What sort of operations a buyer expects, what growth potential we need to show them, and how buyers assess your business as a risk to their investment. A quick and simple trick I use to create systems for your business if it doesn't have any. Why recurring revenue enhances the value of your business and how to show it off. Why clean financials make buyers squeal with delight and how I create a competitive environment. How important it is to show buyers how they can easily take over the business, particularly marketing and customer acquisition, to reassure buyers that you want to transition any current employees over to them. I'm also going to dispel some myths that stop people from selling their business that are totally false. Some big ones, like that you need to have a big team. You don't. I sell owner-operator businesses that only have 1 or 2 people all the time. That your company needs to be 5, 6, 7 years old or more. You don't. I sell much younger companies all the time. I'll tell you what the requirements are for listing a business for sale. That you can't flip a business. You can. I've sold numerous businesses where the current owner has only owned it for a year. If you're interested in selling your business and want to know the bare minimum you need to do before you go to list it, this is the video for you.
Hi, I'm Nate Lynn. I sell companies like realtors sell homes. Specifically, businesses where the owner runs them remotely, like e-commerce, technology, internet companies, and professional service firms making anywhere between $1 to $30 million a year. I've been selling companies for over a decade, and in the last few years, I've sold 20 companies for over $121 million. If your business has strong cash flow and a buyer can run the business from any location, chances are I already know someone who wants to buy it. In fact, if that's the case, I guarantee I can bring you 30 serious buyers and get you an LOI in less than 4 months.
I sold a company in 2016. I was running an e-commerce company, so I was selling vitamins and supplements around the world. I got really, really good at that. In fact, if you Google me and supplements or Google me funnel hacker, I was on Russell Brunson and podcast way back in 2016 about how I was selling tens of millions of dollars worth of supplements and grew a physical product company into a massive organization. And during that time, I built a bunch of software to help me because back then there was no Shopify. There were really hardly any analytics that would help me understand whether I was making any money. You know, who wants to be an entrepreneur to just be forking money over and not, making a pretty penny? So I built some software, ended up becoming kind of a well-known speaker in the performance marketing space. I was selling on a cost per acquisition. So I was only paying for customers in my advertising. If they didn't buy my product, I didn't pay. And so I built this software package. The system that I was linked up to, the shopping cart system back then, was called Limelight CRM. Now it's called Sticky.io. They've raised a whole bunch of money and doing some incredible things out of San Francisco and Tampa Bay. But I knew the founders and owners of that company because of trade shows and just going to conferences and stuff. And they asked me if I'd be interested in selling my technology to them. And I said, sure. Like, how much you pay me? And they started low and I started high and just went through the process of negotiating back and forth. At that time, I honestly didn't really know much about business brokers. I didn't know that my business was worth anything or what it was worth. The negotiation wasn't based on the cash flow of the business. It wasn't cash flowing. I had just developed some technology and I was a strategic fit. I'd spent about $50,000, $60,000 to build that technology. And I had a couple of other clients on it, but I think what I had was an asset where I'd spent a lot of time developing some technology and some key components to the system where Limelight didn't have it and they knew they needed it. And they had to kind of weigh the benefit of how long would it take them to create it or just buy what I had. And so we came to an agreement and they bought what I had. And I learned a whole lot. I talk a lot about it in my book, but I also made a bunch of mistakes. And I've learned over the years how to avoid those mistakes. And that's what I love doing now as a business broker. 2020, I started selling other people's companies, technology companies, supplement companies, internet marketing companies, digital agencies. I've sold marketplaces. I sold a voiceover platform. I've sold so many different types of businesses, brick and mortar businesses as well. So if they've got a physical presence or if they can be run remotely, I've got buyers for them. The key thing is it needs to be at least 3 years old and needs to be making about $250,000 a year in profit. And a lot of my clients don't know how to figure out profit. And it's a little confusing. We'll get into that a little bit later. EBITDA, cash flow, net profit, all of those terms can sometimes make people's eyes glaze over because there's a different calculation for it that different business brokers use, different M&A firms use. But anyways, that usually translates into businesses that are doing $2 to $3 million in gross sales. But if they're at a 20% net margin, they're usually making somewhere around there. Sometimes it can be as little as $1 million in gross sales. I guess that's probably the better threshold. $1 million in gross sales, you're making 20% net margin, you're making $200,000, including your salary. That's all included in it. I started my entrepreneurial journey reading Rich Dad Poor Dad. I was 22 years old. The dot bomb had just happened. I'm 45 now. So I graduated in 2002 with a degree in media art and animation. I was poised for kind of a technology-based career, and I had a job at the Federal Aviation Administration in Washington, D.C., and I was commuting down Interstate 66 for an hour a day in and an hour a day out, and I hated life. I read Rich Dad Poor Dad, got really inspired to get into real estate and be involved as an entrepreneur and really like take hold of my financial future. Stopped trading my hours for dollars and ended up starting a decade-long real estate career where I was buying and selling properties and mortgages and doing development and all sorts of stuff. And that's where I learned a whole lot about negotiation and transaction work. And that was kind of my first career. And then I segued into trying to buy an e-commerce company, a supplement company. It didn't pass due diligence. And I ended up just starting one with a couple of partners and launching it. And it was doing all of nothing for probably about 9 months. At the time, I was the vice president of Bank of America. So I had a full-time job and I was doing this kind of on the side. And then all of a sudden we had like 1,000 sales a day and it blew my mind. We sold out of all of our product, created all sorts of challenges with trying to keep up with demand. And that launched a career in e-commerce where I sold $109 million worth of supplements to millions of customers around the world and developed a really strong acumen for performance marketing and digital marketing, which I still use as a business broker. Had my exit in 2016, sold a couple of other products, also shut some stuff down, found that there's a fine line between exit and shutdown. And was able to sell off some assets, and some just didn't have the value that a buyer would want. So those just got shut down. We're going to get into a bunch of stuff today, talking about what is your business worth. How can we increase the value of your business? What do buyers pay? All that sort of stuff. So it's a little bit about me and how I got to this point. I love doing this. I've sold dozens of businesses. I've looked at hundreds and hundreds, if not thousands, of companies. I do business valuations all the time. And it's always exciting to meet with new entrepreneurs and hear their story and then help architect their exit. Because what we're doing is we're reverse engineering your exit. And it's a dialogue. So many of my clients I've been working with for sometimes months, if not years, before we even sell their company and just helping them reverse engineer. What's the goal? Is the goal 1 million? Is it 10 million? I've sold $30 million companies. I've had $90 million listings before. So anywhere between $1 million and $100 million is pretty much my playground. I've done some smaller transactions as well. So that whole realm is something that I'm willing to take a look at. So some of the key strategies for success that I want to talk about. The number one is timing. We have to absolutely be thinking about when the sale is going to occur. We need to be thinking out, preferably about 6 months. That's like the perfect timing. A typical M&A process takes between 6 and 9 months. That's the average. I can get them done a little bit quicker using some tricks. Sometimes if we get an appraisal up front, we can shorten the due diligence process. We can shorten the process the buyer is taking to try to find their financing. So there's some tricks of the trade there that I've learned over the years. Another really, really key critical aspect of this is your company reputation. When we list a business, you better believe the buyer is going to be Googling it, and they're looking for reviews from customers or clients. They're looking for any reputation. They're looking for any negativity online. And sometimes that sabotages the deal before I can even have a conversation with them. The third is having clean operations. Now, this one, I'd venture to say we've got a little bit of flexibility. I sell a lot of businesses that are owner operators. So it may just be one person or two or partners or husband-wife team. I've sold many husband-wife team companies where they've got some contractors, some virtual assistants, that sort of stuff. But what all of them do at some point in time, and the sooner you do this, the better, but we have to at least start doing this when we're in that 6-month mode where we're listing and we're going to market. Try to find some ways to hand off the operations and make it a smooth transition to the buyer. So if you're the type of entrepreneur where you're doing all the marketing yourself, that's one of the key things that we've got to figure out, how to get that tribal knowledge out of your head onto film. Like you can just do Zoom videos and record them. Now there's all these incredible AI systems that record and transcribe and summarize all of this material that you can use. I use one called Fathom. I see people using Fireflies. There's Otter. There's so many different systems you can use where just record your day. Like just go through your day, turn on Zoom, hit the record button, and just record what you're doing. Do a screen share, record everything. Sometimes it's as simple as that. That's all we have to do in many cases to create some kind of standard operating procedure, some sort of a turnover binder for buyers. In lieu of that, if you're willing to take a little bit of time to spend with the buyer after the sale, so what we call a transition period, that's also something that's really helpful. And well, it's more than just really helpful. It's required. You need a plan to spend at least 90 days. You can usually get away with less time for smaller businesses that have more standard operating procedures. The bigger the business, the more time you need to plan to invest in spending that with the buyer. Now, in almost every instance, whatever your day-to-day is at the day of sale and the week or month before selling, it's not going to be much more than that. It may be a little bit more for the first couple of weeks or month as you're kind of getting the buyer up to speed. But the buyers, pretty typically, they want to take over. And you being in the driver's seat is sometimes viewed as a risk to them. So they want to take you out of the driver's seat. So it's in both of your best interests and your goals and desires. Typically, most of my sellers want to back out of the business. And the buyer wants the seller to back out of the business too, is to transition that over. The fourth key of strategy I see here is when you're thinking about selling, and if you're looking at, for specifically, if you've got a broker that's working with you, and I would love to be that broker, I won't lie, I'm going to take care of the exit. I need you to focus on growing the sales of the business. If you can keep your foot on the gas pedal and pushing sales and continuing to drive revenue and most preferably profit during the sales process, I will sell your business. If you take your foot off the gas and the revenue comes down and the profit comes down, I can still sell the business, but boy, does it make it much harder. And sometimes it changes the dynamic of the deal where we may have to compromise a little bit more. And many of my clients, they don't want to do that. They get anchored at a high price and they want to stick there. But the reality is the lender and the buyer typically are buying the business on its cash flow. So we need to keep that cash flow going sky high. I recently sold an $11.5 million e-commerce business, and a couple of things that they did that really helped was they had a systems first mindset. We did a number of things during the sales process to take the operations off of the owner's shoulders. They were actually fulfilling it out of their garage. So they were selling supplements. They were buying in bulk. They had employees running in and out of their house. They were actually quite successful at this point in time. They had 2 houses. So they had a primary residence and then they had a secondary residence, all kind of in the same neighborhood. And they also had storage units, like cold storage units, not too far away. They had a van. And so they had employees that were driving back and forth to the storage unit. They bring products over to the house. They would take products off of the pallets and put them into small shipments and small boxes, label them, stamp them, shoot, and then take them over to the USPS and ship them out. When I saw that, I was thinking to myself, oh my goodness, we've got to change that. Many, if not all buyers are going to see that as a risk. They don't want to buy a home-based business. They want to buy something that they can scale. And it's really tough for them to scale a business that's being like shipped out of the garage. The other thing that we did was the owner, it was a husband and wife team. The husband, he was the marketer. And so he had a lot of experience, like way back in the early 2000s, selling stuff on eBay. And now this was primarily, these supplements were primarily being sold on Amazon. He was really good at Amazon's advertising platform, and he was able to get in there and tweak things and win the top ranking spot on Amazon for a couple of different keywords and really drive some big time sales. During the M&A process, I was really encouraging him to find an agency that can take over that work, or he's going to have to teach the buyer or one of the buyer's employees how to do that detailed level of advertising. And that was just going to take him more time, which he was okay with. But an ideal situation was to just have an agency doing that work and be able to hand off it. He found a great one. I couldn't take kudos for that one. In fact, I've now got that agency in my pocketbook because this is a challenge I have with numerous companies that are selling physical products, is the owners tend to be really in tune with the marketing. And that's something that we got to transition over. A couple other things they did is they had really high subscription and recurring customers. So they had people on subscribe and save, and that really helps with the valuation of the business. That makes a buyer and a lender very settled, knowing that there's a very consistent stream of income coming in. They also, they cleaned up their financials. When I first met with them, they had two separate entities, one in Texas and one in Puerto Rico. These were actually people I had known for about a decade, and I helped them get moved down to Puerto Rico because there are some incredible tax incentives down here. And if you're planning out way ahead and you're looking at a $5 to $50 million exit, you for sure want to be thinking tax planning. I'll get into that here in a second, but their tax plan, they saw me come down to Puerto Rico. I had a long time relationship with them. They used to be clients of mine when I owned an agency, and they saw me move to Puerto Rico and they were like, hey, tell me more about it. And they moved down to Puerto Rico too. Their exit, that $11.5 million exit, they didn't pay any taxes. You can sell a business in Puerto Rico, has to be a stock sale, and pay no capital gains. Let that sink in for a second. So we cleaned up their financials because they had these two different entities. We had to consolidate the financials because we're showing the revenue coming in from both companies. We had to smush them together so that we could show the entire financial picture to a buyer and let them see it. And they needed some work. There was just some aspects to their financial prep that wasn't really at the level of credibility and high degree of professionalism that we needed. So we brought in an accounting firm actually to help do what's called a quality of earnings. And that became really important later on. It was an upfront investment, but that gave them the ability to create the narrative and to have a really high powered, essentially kind of like a CFO, like a great CFO on staff as a part of the M&A team through the process. Because they were really good at operations and they were really good at marketing. But when it came to looking at the financials and understanding what's going on in the income statement and balance sheet on a daily basis, they didn't even know how to do accrual-based financials and how to move inventory off of the balance sheet over onto the income statement. And if that scares you a little bit, or if that makes your eyes, glaze over and you're selling physical products, we can have that conversation another time. I am deeply intimate on how to convert companies over in that basis. But if you're selling over $3 million and you have inventory, you've got to be on an accrual-based financial system. The other thing that worked out really well in our advantage is there's a really competitive market right now. There's like 300 or 400 buyers for every seller right now. Every time I do a listing, my inbox gets flooded with buyers requesting the NDA, requesting the SIM. I've got these incredible sims we put together. These are massive. This is the prospectus. This is all of the material that goes into what a buyer's looking for when they're checking out the business. At first, though, they don't even see that. They get this pre-NDA kind of teaser where we don't show anything confidential about the business, but we give a financial snapshot. We give some key performance aspects of the business. And there's a really competitive marketplace right now on the buy side. There's way more buyers than there are sellers. That's why I'm doing webinars like this, because I'm looking for other people that have 3-year-old businesses with $200,000 or more in cash flow, because I've got so many buyers. It's like having the keys to the kingdom, but not having a lock to stick the key in. I just am looking for more excellent entrepreneurs like you guys out there, and I can take the competitive marketplace and take it into our advantage. That's how we get a maximum exit, because we want a bunch of buyers. It's just like real estate. You want to list your house in an area where you get the broadest exposure, and you get a bunch of buyers in the open house, and you get a bunch of bids, and then all of a sudden, wow, and then we've got sometimes a bidding war on our hands. A couple of things that are some checklists that are really helpful for you before we go into this process. And we can also do this, if you're interested in talking more and we get into the point where we're engaging in services, some reports are really helpful for me. Buyers are bean counters. They love numbers. Pulling out their calculators. I don't have a calculator nearby. I'm looking around for one. They're always looking at numbers. And if you've got some understanding on your acquisition costs, your customer lifetime value, that is really helpful for me. That absolutely goes in our marketing material. We are not communicating the name of the company, its location, nothing that would showcase it to competition. We're just trying to show a little teaser out there to buyers. The next piece that's really helpful as a checklist is your standard operating procedures, just like I spoke about. And I'll be totally honest, most of my entrepreneurs, they don't have any standard operating procedures when we start the process. So don't get too caught up on this. This is a real nice to have. I like to list that this is available, that this is something that we can, we can showcase. It makes buyers really happy, but this isn't something that would prevent you from being able to list the business. The next one is flexible team structure. If you have a business where a buyer doesn't have to be geographically located at the business location, I have got so many buyers, it's unbelievable. If you've got a team that is remote or in a flexible location, or again, if they're somewhere where they have their own on-site management and the buyer doesn't have to be in that location, holy cow, we're going to get flooded with buyers, because the buyer market is international. I'd say it's probably still 80% US based, but we have buyers with good money and great financial acumen and funds to deploy from everywhere in the world. And since the pandemic, I've seen so many businesses take their business out of being really concentrated in a geographic area, having an office, having everyone coming into the office, and start to disperse into a remote or hybrid structure of remote and on-site. That's really attractive to buyers. And another checklist item, I mentioned this before, I just want to repeat it. Having good brand recognition. If you can support your business with some social proof, some testimonials from your customers, get your Trustpilot ratings going if you haven't already. Ask past clients, past customers for reviews, something that can reflect some of the market trust and your customer loyalty. That's going to play really well. Now, when we get into your exit strategy and kind of phasing things out, the first thing you really want to do is like establish your systems. You're building this foundation. You've got your leadership in mind. Sometimes you may not have a whole lot of leadership. It's just you if you're an owner operator, and that's okay. But you can reduce your dependency or the buyer's dependency on you by starting to do some videos and creating some SOPs, kind of creating, in mind, like put yourself in the buyer's shoes. Are you going to buy your business the way it's set up right now? If you didn't have the knowledge that you've got right now, could you buy it? I need you to put yourself in the buyer's shoes. Start thinking through what their risks and concerns are, because that's what stops the buyer from buying your business. They think it's risky, or they've got concerns around how can they continue the level of sales that's going on. We want to try to create some owner independence. So if you can find some ways, again, to transition things, delegate stuff, if there's some people that you can bring in, some virtual assistants, or if you've got some other staff that maybe needs to be hired, sometimes it's worth the cost of doing that. And I know that that may affect your EBITDA or your seller discretionary earnings, cash flow. It can still be a huge benefit because, again, it's going to be taking you out of the operator's seat, out of the driver's seat. Streamlining your operations. If you've got a company that's selling products, you absolutely want to have a 3PL, a third-party logistics company. If you're selling services, think about how your sales team is working. Are you the main sales driver, or do you have some sales reps that's doing it? That tends to be an area that operationally speaking, some service companies. So whether you're B2C or B2C, there's some things that you can do there. Marketing. I've been a part of Entrepreneurs Organization and numerous entrepreneurial ventures over the years and entrepreneurial forums. And usually the owners are the primary sales drivers of the business in the beginning. And if that's you, start to think about how can somebody else take over the marketing and sales. Then with fulfillment, whether it's a physical product or if it's a service, are you the main driver that's fulfilling the actual service or the product, or somebody else on the team or in the company doing that? Start thinking about ways to start gently moving in the direction of delegation and having some team or having some support or having automation. Geez, there's so much incredible automation nowadays that you can use. AI, like things are changing so fast. In the next year, like there's so much stuff. Like I've let go of virtual assistants and I just have automation systems that are doing things that I used to have to do manually, or I had to pay someone to do manually. Now I'm not doing that anymore. And that's just as a business broker. Another thing that you can do is think about the growth channels of the business. And if all you could do is put together one page, one slide deck of if you were to continue to own the business and what else you would do to drive new sales and have new products or new services or cross-sell stuff or back-end marketing, email marketing, like what are the things that could be done to drive new growth? All I'm asking for is one slide. That makes a huge difference for me to help sell your business. And then when we talk about preparing the sale, that's pretty much what I'm here for. I'll put together the teaser. I'll put together the SIM. We'll get everything ready to go. I need your help with the financials. So if you're not on an accounting system, get on an accounting system, QuickBooks preferably, or Xero or something like that, because the one piece of homework I need from my clients is every month I need updated financials. It's an income statement and a balance sheet, sometimes a cash flow report that I can show to buyers, because we have to show them and the lenders every month what's going on with the business. With all of that in mind, that really gives us an opportunity to negotiate with strength. I'm going to set the business up and with a narrative that is going to allow us to so confidently approach the marketplace that we're the belle of the ball. I can guarantee you, if your business is at least 3 years old or older and you're making $200,000 a year and it's growing year over year in profit, I will get over 30 buyers and an LOI in 4 months. I guarantee it. I've done it every time. And that's where we want to be. We want to be able to negotiate with strength. We want to confidently engage these buyers. We are the prize. You are the prize. I position you as your wingman. I bring you in. I've been watching The Gilded Age and Downton Abbey, and the way that they present, the belle of the ball, these beautiful young women, and present them into high society. That's what I do. I will take your business and position it as this prize, and then let the suitors come and take a look. And that's how we get incredible exits. A couple of other strategic steps. We kind of gone through a little bit of this. So operating, having a business really efficiently, that's super helpful. Enhancing your brand, and having your brand presence. I'm going to kind of slide through this kind of quick. Your financial health is shown in your financials. The only thing you've got to worry about is your cash flow, profit, EBITDA, whatever it is that you're tracking. I'll help you get that number figured out. Is it growing? Is your profit growing? That's going to create a fervor of buyers coming after it. We've got three different valuation methods that we use, and I'll talk through this a little bit more when we're in the engaged, when we're going through the engagement process. But it's helpful just to give a quick overview. There's three different ways to value business. There's an asset-based valuation, which is more traditional for Main Street businesses that have a lot of equipment. They may have some proprietary gear and equipment and manufacturing equipment, stuff like that. They may also be dependent on the real estate of the business. That's an asset-based valuation. What's more traditional is an earnings-based valuation. And this is where, again, we look at the financials, we're tracking what the profit has been over the last several years, and then we add a multiple to the earnings of the business. That's where like 99% of my business sales have occurred over the last decade. And then the last piece is the market comparison valuation. So this is like in real estate comps. What are the other houses in the neighborhood selling for? So I do kind of a hybrid approach where it's earning-based valuation and a market comparison valuation. So I'll help my clients figure out what their earnings are. And then I've got access to massive databases. And then I personally have just sold so many businesses. It's like, it's in the back of my head. I know exactly what these businesses sells for. And then so I'll apply a range. It's called a probable pricing amount. So it's most probable price. And it's like a broker's price opinion. I'll be able to know pretty well where we're going to be hitting in the valuation range. And then I put it on my client, the prospective client, the seller, and ask, what's your goal? What are you looking for? Because if you're looking for a number that's way outside of the range, then we just may not be there yet, because the buyers aren't going to hit too far above their belt. There's just a certain level that they can go to, because most of these deals, especially if it's over $1 million, it's getting financed. So we're not only working on a buyer's compression of the deal, we're working on a lender's view of the deal as well. So those are a little bit of insight in the valuation process. Some key performance indicators. We absolutely want to track your revenue and growth rate. Number one, that is the biggest thing that we can do to showcase your business, to make you that prize, is show growing revenue and growing profit. We want to evaluate your gross margin for profitability insights. Sometimes I can do this a lot. If you have anything that's technology related, e-commerce, software, digital marketing agencies, I've sold so many of those. I've run them. I've paid them. I used to pay a digital marketing agency millions of dollars to sell my supplements. I know the benchmarks of profitability for these businesses. And this is something else that we can do too if we do a pre-market appraisal. I've got an incredible appraisal team that I subcontract to, and they give us benchmarks of our businesses. So when we do the appraisal, we know before we even go into listing the business what it's worth, what the lenders will lend, which is the key component there, and also where your company sits benchmark-wise with your expenses compared to the rest of the competition that's out there. And that by itself, I've made my clients tens of thousands and hundreds of thousands of dollars just helping them optimize their business. I've got a bunch of testimonials on my YouTube channel about that. If you go in to YouTube and click on my case studies, I've got numerous clients that have told me that how much money I've made them in their business even before they sold their business. That's just because I've done this for so long. I know where, there's low-hanging fruit that we can jump in on and can make some magic happen. We definitely want to measure our customer retention rate or customer repeat order rate. If you've got a type of business that's one-off purchases and customers come back and purchase, products again, or if there's some upsell or cross-sell, or there's some other metric that we can tie customers together, we want to try to figure out what that is and showcase that, because that's real important. And if you've got any kind of monthly recurring revenue or annual recurring revenue, if you're subscription based or even a service, if you're offering a service, HVAC companies right now are hot because they are charging people a biannual fee to come and service air conditioning units and heating units and stuff like that. So, just be thinking about if there's a way that you can have a recurring nature of revenue from your clients, by all means, be thinking about that, because that is super exciting for buyers. A couple other strategies that I can talk about with building a good management team. If you've got, the larger the business, if your business is in like the $5 to $10 million range, you're probably looking at some, needing to have some leadership. Some e-commerce businesses can get away with just having like, the owners operating it, sometimes all the way up into the 10, 15, $20 million gross range. I've seen that happen before, and I've sold those. But for other businesses, if there's, any way to delegate, and empower managers or even just virtual assistants to take on some of the operations of the business, man, that just really shows well. Now, we're not just showing an owner-operator business. Now we're showing a real business to a buyer that they can buy. And I've got private equity firms, hedge funds, family offices. I've got publicly traded funds that are as large as $6 billion. And some of their requirements are there needs to be a management team. But those are for bigger deals. Like when you're talking 10 million plus, you need to really be thinking about, is there a management team? Is there like a level of staff that it has some leadership in there? So that's when I really, really recommend, devote some time into cultivating some management, some leadership. And then, really just have, great communication processes with your team. Have standing meetings every Monday. You should be doing that with your entire team. I did that all the time. At one point in time, I had 26 employees at a 16,000 square foot building. We were shipping out thousands of units a day, and we had a standing meeting every Monday. We literally all stood around, and this is back in the days when it was, pre-pandemic. I don't think I would do that same setup now, but sometimes it's great to have everybody in a central location. And as long as, the buyer is able to step into that situation from a remote area, man, we're still going to have so much interest. But establish really good, clear communication. This is the part where as an entrepreneur, I struggled. I find myself really challenged with being like a people manager. So you may find yourself like kind of a COO or someone that is a people manager. Could even be fractional. It comes in just a couple of times a week, and they're kind of the rah to the team and helps, keep everybody going and to keep that conversation and that clear communication going. Okay, some pre-sale marketing strategies. Again, I'm just going to reiterate these because they're so important. Having a strong online presence, because every buyer is going to Google it eventually. In the beginning, they're not going to even know the name of the company. They're not going to know where it's at, that sort of thing. And I'm making them share with us. They sign a non-disclosure agreement first. And at that point, they still don't even know the name of the business. They know a number. I have a unique code that I use to share the number. Once they sign the non-disclosure agreement, I'm asking them for what I call a buyer profile. So I'm getting their LinkedIn account, like trying to understand what is their liquidity. Are they raising money? Are they using cash? Are they how are they going to structure the deal? I'm getting a lot of information from them. Once they filled that out, then I share this MacDaddy SIM that has the name of the business on it. It's got the location, the systems, the processes, the marketing. We're not sharing any secret sauce here. That's not happening. We're keeping all your secret sauce and your mojo. We're keeping all that confidential till well into the process. But what we want to do is at that point, the buyer is going to go look online for you. They're going to be looking for reviews. They're going to be checking you out on social media. They're going to be curious about, how do your consumers respond to you? So that's absolutely a pre-sale effective marketing strategy. Be thinking about that. I've had clients that go out and they do press releases ahead of time. They're creating this aura of magnificence. They're creating this spell that makes them larger than life. And sometimes that's really important. And if there's anything negative, we got to go figure out how to get rid of that. I've actually sold several reputation management companies that specialize in removing negativity off of the first couple of pages of Google. And so if you happen to Google your company and there's somebody that says that, they could be making stuff up and saying lies about you, but if it's on the front page of Google, we got to take care of that. Sometimes we got to fork over a little money to get rid of that. Some other pre-marketing strategies. If you're not emailing, I deal with this all the time. I have e-commerce clients that they're selling physical products, but they're not emailing their customers. Get Klaviyo, get in there, find an email marketing company that can do that if you're not going to do it. Use content marketing strategies. Like you make sure that you're on social media, that you've got some content marketing. We want to start to optimize for search engines and AI. If you search for top business broker in Puerto Rico, guess who you find? Me. I'm getting listings from people in Puerto Rico because I'm an IBBA member. I've been doing this for so long. I've got a massive YouTube channel. Well, massive for business brokers. I'm not like some of the entertainment channels out there, but for what I do, I stand leaps and bounds above everyone else. I've written best-selling book. I'm on Amazon. I'm all over the place. So people will see this, and that's all of that has enabled me to be the go-to de facto business broker in my area from ChatGPT. Some common mistakes: not having a tax strategy. Sometimes I have clients that engage me and we go in the process of selling and they don't know what to do tax wise. I please beg of you, talk to a tax strategist. Think about what your net goal is, what your tax consequence is. I've had clients in California completely unaware there's a 13.5% California sales tax. So they have a $10 million business for sale. They're going to be paying a lot of money to the state of California. I have literally helped people move multiple times, help people move out of California to Texas, at least, help people move out of Texas to Puerto Rico, move to Florida, move to Nevada, move to different places. When you're thinking about this is when you need to have a real conversation with your loved ones and start thinking about what's going to be your short-term and long-term goals, because it may not be sexy for you to sell your business when you're stuck in a real high tax bracket. And I'll have these conversations with you because nothing's more frustrating for all parties involved to get down the line and have a buyer give you a great offer. But then all of a sudden we're like, wait a second, after taxes, this isn't going to look all so hot. So we need to have an effective tax strategy, and talking to your tax specialist is going to help you with that. I can't give tax advice. I can offer some suggestions, but I don't know your tax situation. Another common mistake: inadequately prepared financials. If you can't hit the export income statement and balance sheet button on QuickBooks or Xero, we're not ready to sell. We have to have the financial statements in as simple as a format, updated every month. They need to be updated by at least the 15th or the 20th of the following month, because I have to update buyers and lenders every month from the time that we list until the day of closing. And you better guarantee, a better bet that the day of closing, buyer and lender are going to want an updated income statement and balance sheet. Another thing that happens is people underestimate the time required to sell. Man, I wish I could get this thing done in 90 days. The fastest deal I have ever done was 61 days. But that was an extreme situation. From the day he called me until the day he got a wire was 61 days. But on average, it's 9 months to sell a business. I can shrink that by using some tricks and doing some pre-market work. But it takes a little bit of time. I would expect you're going to look for 6 months on average, maybe 7 months on average. So you need to understand that you've got to be driving the sales process and the sales and the revenue. I'm driving the sales process. Let me restate that. I'm driving the sales process, the M&A process. You're driving the sales of the business. So if you do that and I do the sales process, we will clear and close. Oh, the post-sale. So transitioning the business. This really isn't too complicated. For smaller businesses, if it's under $5 million, you're going to need to spend at least 90 days transitioning the business. 1 month is going to be spent. You're continuing to run the business. The buyer is looking over your shoulder. You've got 1 month where you're doing it together, and then you've got 1 month where the buyer is doing it and you're looking over their shoulder. For bigger businesses, sometimes that transition period may be up to 2 years. If you're over $10 million, chances are you're going to have to retain some equity and you're going to have to be involved for a year or two. Sometimes I can have it much quicker than that, but I just want to set expectations. It's rare to have a 10 million plus transaction and you to be able to walk away and just bounce out of it. Okay, so other things with the post-sale, employee relations. This is something that I encounter all the time too. I can't think of a transaction where a buyer wants to let go of any staff. The only staff that ever gets let go of is usually accounting. And typically you're outsourced your bookkeeping and accounting. If there's a CFO, they definitely don't get let go of. Everybody else on staff remains on staff. Buyers want the business exactly the way it has been run to make the cash flow that's at the day of closing. They want to keep all the employees. They want to foster good employee relationships. Sometimes the sellers need to offer a little bit of retention bonus. It usually comes off the seller's side of the transaction. Sometimes the buyer will bonus a little bit as well. But it's really important that you have a really good relationship with your employees. You don't say anything about the sale to anybody ever until the day of closing, unless the buyer needs to interview some key leaders. Only at that point in time do you reveal the exit to those key employees. And then the way that we do it is we communicate that there's a new partnership coming, that you're looking to bring in a partner. This is really critical. A lot of people get really concerned about, like, what do I tell my employees? Well, it's simple. You don't tell them anything. They don't even know that it's for sale. They'll have no idea. There won't be any reason for them to know about it. We can communicate that to them at the appropriate time. Some buyers want that to happen a little bit earlier. That's when me as the broker steps in and say, not until we're clear to close. We need the legal process to be done. We need the financing to be wrapped up. We're not going to be having communications with the employees until the very last minute. Your customer relationship management. This is something that's pretty critical. We do a handoff. A lot of your contracts, typically the buyer is going to create a new company that's basically the same name as your company. It might be in a different state, or they may add an extra word to the end of it. So we'll transfer contracts over as a transition period. It's no big deal. It's almost like updating the bank, the payment invoice. So instead of customers paying this bank account, now they're going to pay that bank account. We make it a non-issue. Something else that a lot of people don't think about is, when you sell, what are you going to do? What do you want to do? I'm a huge fan of these exits being an opportunity for you to really reflect on your work-life balance, giving some opportunity, take a little sabbatical, spend some time with your family. I have found, for myself particularly, my spiritual evolution has really bloomed since having my exits. Spent more time, with family, with myself, with God, with my own, spiritual thought process and personal development. I have invested massive amounts of time, money, and effort into my own personal development, spiritual development, emotional well-being after I exited my businesses. And that's the beauty of this. Like, I read Rich Dad, Poor Dad not to have a job for the rest of my life. I read it because I wanted passive income, to have the financial freedom to be able to do crazy things like move to Puerto Rico, homeschool my children. I've got a 16-year-old in the next room and an 11-year-old. I'm a single dad, and I spend so much time with my boys. And we're constantly, hiking through the rivers and going looking for waterfalls. We're surfing at the beaches, and I spend more time with them now than I ever have in my life. I'm making more money now, and I have more time now than I've ever had in my life. And it's all come because of successive exits. And that's really what I want to be, because I remember looking back in time and thinking to myself, holy cow, I built a job for myself. I'm working 50, 60, 70 hours a week. I'm making good money, but I'm not present for my family. And all my family wants from me is my presence. They don't want another zero in the bank account. They want me. And so this is something to think a little bit about. What's your motivation for selling, and where are you headed? What are your future ventures? A lot of my clients sell businesses. They take some time off, and then they come back to me and we go buy a business. I've got one client right now. In fact, the guy who wrote the foreword to my book, Austin, I sold his e-commerce business for $25 million. It's been 6 years since that happened, 5 years since that happened. We're going to go back and buy that business. The owner, the people who bought that business, it was an aggregator. They struggled. They went through bankruptcy. The business declined. Fortunately, the reputation and the product is still really good. But now we're going back to buy it for a tenth of the price of what they sold it for. And they're going to rebuild it and do it again. He loves me. He's always giving me referrals. There's a great testimonial and video. It's like 20 minutes long, where I talk about how much I helped grow their business, and I helped them get on to an ERP system. I helped them with fulfillment, because I know these e-commerce companies inside and out. I've run them for over a decade. I've done hundreds of millions of dollars worth of sales. It's like, I know these. So that's really, really cool. Michael's asking, what's one of your concerns when selling? My biggest concern when I'm selling is my client not putting the foot on the gas with their sales. The number one thing that I struggle with is my client getting distracted and something happening and the business sales starting to decline. That is my number one concern. That happens every once in a while, and it's really a challenge for it. Okay, some key market trends influencing business exits. There is a huge demand for digital businesses. Anything that can be run remotely, massive demand. If you can focus on anything technology, and if you have AI in here, we're in the middle of some massive changes. Things are going to be completely different a year from now than they are right now. So I think that would be huge. If you're able to focus on technology and AI and automation in your businesses, that's absolutely critical. Right now, we still have kind of high interest rates, and that's affecting valuations. We're still able to get some incredible exits, but until the Fed starts dropping rates, I think that we have a little bit of time on our hands where we're just dealing with the environment the way that it is. Sometimes we have to have a little bit more structure. Sometimes there's a tiny bit less cash at closing, but we get around that by being flexible and compromising and still architecting a deal that works for my clients, works for you. Growth plans, absolutely. If you've got a one-page document, a slide deck, that's what the growth plan of the business would be if you were to stick around. That's going to drive up a ton of interest. And then also, we've got customer preferences. They evolve a lot. There's shifts in customer behavior. You need to be thinking about that. You also need to be thinking about, are you dependent on any marketplaces or platforms or advertising systems that if changes to algorithms happen, can those affect your business? If you've got an e-commerce business, are you selling on Shopify? Are you selling on Amazon? Are you selling on Walmart? What happens if one of those changes something? Are you going to be stuck in a position where that change affects your business? So be thinking about that. That's where a lot of my clients decide they want to sell, is because they may be one algorithm change away from their business going down. A couple of things that we can do to effectively prepare for due diligence is just organizing documents. If you haven't already, you should have all of your bank statements saved somewhere. Being able to export stuff out of QuickBooks, that's really easy, really helpful. All your corporate hygiene, you need to have your corporate formation documents, all that sort of stuff, have that saved away somewhere. I would expect at this stage in your guys' careers and your businesses, you've got all that. But check to see if there's any compliance you need with regulations. One business that was the gentleman who wrote the foreword to my book. Their business was a baby product, or kind of a toddler product. And there was some regulatory and some compliance, some compliance aspects that they had not considered that they needed to go and get. So they had to make some revisions to their product because the fabric was something that could potentially cause like suffocation, that sort of thing. So that's something that is absolutely important to think about the compliance. Prepare for your detailed inquiries. You are going to get the forensic look. So absolutely be prepared to respond to questions. That's where we want to have great financials. We want to absolutely be able to respond to them intelligently, articulately, and quickly. Engage a tax advisor. Absolutely, you want to have your tax advisor on hand before you start this process. And honestly, you should be talking to your tax advisor even before your broker. And it's really helpful for me to be able to understand what your goals are. If you can get your financial statements reviewed, I absolutely recommend that. Many of my clients, depending on the size of their business, it's a requirement for me to list them. So we can talk about that. It just kind of depends on what the size and scale is of your business. And then doing some internal checks and some audits and stuff, like peek under the hood of your own car and take a look at what's going on. Talk to your employees, look at your income statement and your balance sheet. Look to see if things are off. Go back in time, look at it by month and compare. Where are things slightly askew? Where are things high? Where are things low? Buyers will point it out. They will ask me, and then I'll have to ask you. So we may as well figure that out ahead of time. I'm going to skip past some of the other successful business exits. I would encourage you to go to my YouTube channel. So my YouTube channel, I've got a playlist called Case Studies. I've got 15 some odd case studies in there. You can go and look at the success I've had selling e-commerce businesses, SaaS companies, digital marketing companies, reputation management companies, and all of that. Harnessing technology. Technology is huge, especially right now. If you don't have a CRM, or if you're not on a shopping cart, or if you don't have Go High Level, if you're a service business, holy cow. Like the quicker you can get that set up, the better. Having some analytics, tracking your performance, tracking your customers, the customer ladder as they're moving through your system, having Google Analytics set up, understanding where there's breakpoints in here. That's really, really important. If you're using project management systems, those are really important. Any systems that you can do that's going to decrease your tribal knowledge and increase your systems and your operations in a digital way that a buyer can take over, they are going to love you. Data centralization. So if you're centralizing all your customer information, that's really helpful. Again, usually that's for reporting purposes. I need to understand some reporting aspects of the business, like customer lifetime value and the acquisition costs, so that we can get into that as a key selling proposition for the business, that's really helpful. And that goes into our performance metrics and then operational insights. When you have a deeper level of operational insight in your business, you're going to be able to talk so much more intelligently and articulately to buyers. So any way that you can create that, that's going to be super important. Navigating your exit effectively. Exits do take time. This does not happen overnight. Sometimes I'm working with clients a year out, sometimes 2 years out. The bigger the business, typically, sometimes the longer it takes to really architect this big exit. If it's a smaller business, we don't always need the same amount of time, but this is on a total case-by-case basis. And for those of you that are interested, you can contact me afterwards and we can talk about your specific situation and figure out where's the appropriate time frame for me to be involved. And there may be some pre-work that you need to do, some exit planners and stuff as well. There's the Exit Planning Institute is a great resource. Traction is a great resource as well. When I was part of the Entrepreneurs Organization, half of the people there didn't use Scaling Up and Vern Harnish's work. They used Traction and Gino Wickman to help them systematize their business. So that's kind of the planning aspect of it. Preparation's absolutely essential. Persistence. We can't quit in the process. We have to be looking for a way to build a bridge when there are shaky things that happen. Every deal I've ever had has broken 8 or 9 times. And we have to have a stick-to-itiveness, a willingness to continue to consummate a transaction on the buyer side, on the seller side, with the broker being the bridge in the middle, and oftentimes adding in the lender involved in that as well. I've had a couple of clients here. Chris M., I sold an e-commerce company of his. He just left me some kudos. He's actually looking at buying some businesses. Scott Hutchinson's another one. I sold an e-commerce business of his. Gary, you're asking, what would a win look like for you in the next 12 months? That's a great question I'd have for you guys. What does a win look like for you? Like, where do you want your business to be? And then that's what we do is we reverse engineer it. So we're looking for what your goal is. And then I can reverse engineer where you're at based on where you are currently. I'll do evaluation of where you're at currently, take into consideration where your goal is 12 months from now. And then I'll literally be able to tell you, what do you need to do to get between here and there? Nathaniel's asking if you're open to staying involved post-sale for transition period. Every seller has to be involved in a transition period. That is absolutely critical. It may only be 90 days. Sometimes it's as much as a year, 2 years. Angela asking, what would you consider a deal breaker? That's a great question. Deal breakers come up for different people in different ways. Sometimes it's financial. Sometimes is the buyer going to take care of the staff? Sometimes it's, how is the buyer going to treat the brand? I have some people that have very altruistic ideas in mind when it comes to their business. And if the buyer isn't a cultural fit, if they're not, in some cases, I have one particular client, she's very politically sensitive. And if the buyer is not of a similar political persuasion as her, then she wasn't going to do a deal with them because she felt like that was a critical component to the health aspect of her business, very much like an RFK kind of gal. And, not into certain aspects of the health and pharma system. And she had a very focused intent business around holistic health and wellness. And if the buyer wasn't going to have that same sort of approach to it, she just wasn't going to do a deal with them. And I've had clients before too, where it's a number thing. They've got a goal. And that's what I'm trying to figure out. Like, what is the number and why is that the number? Because I've introduced clients to investment strategies post-sale where they're making 1% a week on their money. If you make $1 million on an exit and you're making 1% a week, it's like $600,000 in a year that you can earn in income. So oftentimes, if I understand what your motivation is and what money you need to make, there's different investment strategies that I can suggest that I'm personally doing because I've done well. And I use those investment strategies for my own portfolio that I just pass it along to my clients, and I don't make any residual or any income off of it. I'm not a wealth manager. I just recommend people be frugal about, their lifestyle, and then also try to find ways to create a good income for themselves after the sale. Chris is asking, what area of your business would you say still needs to work before a sale? Financial. This is a perfect question for each and every one of you. look at your business and think through, well, what is it that you need to, based on everything that you've heard today, think through some things that you might need to brush up on. Most of my clients struggle with the financial aspect of the business. They don't have really clear and clean and credible looking financials. They tend to be sales focused, and they're looking at the cash in the bank account as opposed to looking at. So that's something that's really important, that I would say that, look at your business and all of the different areas of it. 3 of you are thinking about selling it yourself, and 7 of you are thinking about doing a business broker. If you decide to go through the sell it yourself route, be prepared to arm yourself with a massive sim. Learn how to do this. Make sure you learn how to tease buyers with some information about the business without giving away too much information. You're going to need to arm yourself with where you're going to list it, how you're going to list it, how are you going to vet buyers. Do you understand the nature of getting their financial profile? Do you feel comfortable asking for proof of funds? Ask them where they're going to get their funds from. If they don't have funds, how are they going to raise it? There's a whole lot of work that goes into doing it if you want to sell it yourself. Oftentimes, buyers will give you an offer that's too good to be true in an LOI, and then they grind you down over months and then retrade the deal, or they try to get you with some networking capital or some other savvy things down the road. Most buyers can outclass an individual seller in 10 or 12 different ways. So what I do as a business broker, I don't let them get away with that, because I've done so many of these. They can't come to me and say that, oh, this and oh, that. And I just know that that's not what's going to happen, and that's not the reality of the situation. And I build such a competitive process that we can walk away from any buyer at any point in time. So if you're thinking about going down the sell it yourself, absolutely would recommend getting my book. I'll put in a complimentary copy here. You can go and read. It's a PDF. You can read my book and how I did what I did, and you're welcome to give it a try. Something I would say though, if your engine, if you blew a rod or something like that in your engine, would you try to do that yourself, or would you take it to an expert? If you're, thinking about selling, if you've ever sold a property before, do you want to try to put a for sale by owner sign out there, or do you want to work with the realtor that has sold the highest priced properties in your neighborhood? A couple of different things to consider. So I absolutely would advise, consider all options. For those of you that want to sell it yourself, God bless you. It's tough. I sell deals all the time, and constantly I'm learning, but I've been doing this for 10 years. I've sold $121 million worth of businesses over the last 10 years, and I'm still learning things every day. And still, from time to time, buyers are out there and they're savvy. They'll try to find ways to try to get one over on you, because I can guarantee you one thing: they're looking out for them, not for you. Thanks, everyone, for joining. I really appreciate it. Hope to see you in a private chat or someday in the future. Also, if you're not looking to sell and you know someone else that is, I pay 10% of a referral fee to anybody that sends a lead my way. So be happy to work with friends and family and other colleagues. That can add up. I've sent over $120,000 on a $28 million transaction to somebody before for a referral fee. So happy to. Don't be dismissive about referral fees on this. If you've enjoyed what you've had to see and you think that I can provide some value to a friend or a family member or somebody else that's an entrepreneur, please make an introduction. I thrive on referrals. Thank you very much.